Bill DeRoche, last fall, QuantShares launched 7 market-neutral ETFs. What's the reaction been like so far?
It's been very positive. We've had lots of meetings with investors trying to explain to them exactly what we're trying to accomplish. We're basically trying to give people access to strategies that have typically only been available through hedge funds to accredited investors. It takes some time. There's definitely some education involved, but I've been very pleased so far.
All right, let's step back. What exactly is a market-neutral ETF?
Okay, for us, the way we define market neutral is that we're investing equal dollar amounts long and short. You actually also have a cash component with the securities. So you end up with 200 securities long and 200 securities short, which basically insulates the investors from moves in the overall market. So you can focus on a particular theme.
All right, well, one theme is momentum. You have a MOM fund, that's the ticker. You also have a value fund, the ticker is CHEP, the CHEP fund. Tell me the difference between these two.
Yeah, so for our momentum fund, what we have is we have a way to rank securities. So for momentum, we rank securities based on their returns over the last year. So we take the securities that have ranked the highest in terms of their returns, and those are securities that we're going to go long. And then the securities that are ranked the lowest, the ones that have had the poorest returns over the last year, those are the ones we're going to go short. We actually do this sector neutral, so you end up with a fund that has insulated itself from the market and from sectors, so your biggest driver of the returns are going to be this ranking mechanism or momentum. For the value fund, our cheap fund, we do the same thing with basically price ratios. So we're looking at cash flow from operations to price, forward earnings to price, and book to price. We weight them equally, and we weight securities by those metrics. The securities that look the least expensive, we go long. The securities that look the most expensive, we short.
And who are these ETFs designed for? Are they for individual investors or institutional investors? And if they are for individual investors, how much of their portfolio should they put into them?
Yeah, these actually are for anybody. They make a lot of sense. They've typically been used by people who have purchased hedge funds. Unfortunately, in the past, hedge funds have only been available to accredited investors. Now, by basically putting these into an ETF, anyone can purchase these strategies. Value, for instance, has been a strategy that academics have talked about for a long time. Cheap stocks have done better than expensive stocks historically. By putting them into an ETF, basically anyone can get exposure to these now. Now, when we look at people's typical alternative allocation, you're probably looking about 10% of their portfolio would make sense. What we're seeing now is a lot of people looking to get low correlated assets, basically assets that aren't correlated to the broad market, into their portfolio, and they're going out and they're purchasing lots of different types of strategies, a lot of overseas strategies, whereas our products are built on the 1,000 largest stocks in the US, so you can get this very low correlated return stream without having to, say, go buy an asset that has very little liquidity associated with it.
This market is
stock tickers market.
Stocks have rallied this year.
We're coming into a Monday where we're getting